I'm the executive chairman of the company and a founder of Exeter back in 2003. And if you've followed it through its split of Exeter out in 2010, I should say, it's been a real win for shareholders. This is important stuff, not so much as it was last week when I was in the US, but certainly important, the forward-looking statements. This is a great venue for forward-looking statements. Man, there's some good ones coming out from the talk I just heard. That's a share structure. The market cap of the company is about 280 million. You can see 68 million of that is cash. If you say, what is our budget over the next year, all other things being equal, it's between 22 and 25 million dollars. I showed this before, but I'm sure the dynamic of most investors is to plug us into this very active space of Chile. This is called the Maricunga Belt. This is a really busy slide, but I think forget the left side and look at the right side. These are largely big deposits. What's really important, and that north to south on that map, you can see on the far right is Argentina, the gray is Chile. All of those squares represent names of mines, and really what's most important is who owns them. I think this mineral belt here from north to south is about 80 million ounces. You can see us right in the middle. We are certainly the largest of the independently, and independent means not a major, independently owned projects. The biggest one you can see south of Caspiche there is the one that Barrick and Kinross have, 26 million ounces of gold. And the take-home piece is who owns all these projects. Well, you can see Kinross, Barrick Kinross, Nippon Mitsui. You can see Teck, Goldcorp, and then Barrick. I don't think any of those current owners found them. It was a matter of the M&A process has evolved through the life cycle of the project they were taken on. And that's really the dynamic of the Exeter, is when and how it fits into that space. This just shows it in a little more detail. You can see Caspiche there, 19.3 million ounces of gold. This is in reserves, 4.6 billion pounds of copper. And you can see right south, or east of us, actually, it's given the orientation of the slide, it's actually south, but to the right, you can see Serra Casale. Serra Casale is owned by Barrick, as I mentioned, 75% Barrick, 25% Kinross. It's in permitting now. The final permitting is expected to be sometime early next year for that project to go ahead. But there are other mines. You can see Maricunga mine there. That's Kinross's mine, producing 156,000 ounces of gold a year. So as much as you're at 14,000 feet, there are mines up and down this belt at 14,000 feet. So just going, we're going to, I think the back office here is going to do a quick click just to kind of show you. We're producing some new materials because the pre-feasibility study just came out on the project. But just to give you a sense of the size of this, it's easy for me to say 19 million ounces of gold, but what does it look like? It's a big deposit. I'll quickly refer to it after this, but to get to these projects, there's a lot of infrastructure. As much as you say you're at 14,000 feet, there can't be much. Look at the mines and projects up and down the belt. And you can see us with Caspiche in there, like I said, 6 miles away from Serra Casale, 10 miles from Maricunga. A lot of infrastructure going in. People say to me, if you were to marry the infrastructure of the planned infrastructure of our Caspiche project with the others, how much money would you save? A lot, and that's all I can say. We're modeling this project as a standalone, no shared infrastructure with anybody else. That's how it's being modeled at this time. Would it eventually go that way? Undoubtedly, it won't. Just looking at the deposit, we found it in 2007. We got one hole into it, and took us 4 years to drill the project off. We had done, the drilling had done earlier was by Anglo-American. In fact, they have a 3% royalty. Then New Gold, a New Crest came, they drilled it. I think about 50 holes went into it before the big discovery was made. You can see it in red. It really doesn't outcrop much. It kind of does a bit. You've been there, Louis. It kind of does. This is an RC hole that went into it. This is it's a mega deposit by world standards, 30 million ounces gold equivalent. 55,000 meters of drilling. It's interesting. We drill that much a year in Exeter, and that's all it took to define the resource. But because it's a porphyry, it's relatively wide-spaced drilling was all that was necessary to bring it into proven and probable. Now the project we just finished a pre-feasibility study. I'm going to talk over this to keep it going. Statue of Liberty to show for scale. But this is really important here. There's an upper gold deposit with no copper. And this is 1.4 million ounces of gold and about 5.4 million ounces of silver. And we have done a study on this already, modeling the economics of just that. In fact, that upper project there is now going into full feasibility. It'll be about a $5 million study to show the viability of just the oxide. But of course, the drilling kept going into the sulfide, went down over 3,000 feet, and now we have a pre-feasibility study on developing not just this higher grade central core, but the lower grade material around it, which will kind of evolve here. There it is. So you can see, look at the scale on the left, a kilometer depth. That's in fact what the open pit is being modeled at, is a kilometer deep. And the pit would be 1.5 miles wide. So I'm mixing up my kilometers and miles. Okay, we can jump back to the other presentation. So like I said, it is a pre-feasibility study. That study came out on January the 17th. And it's only, okay, I'll jump, here's my script, okay. It was done by Jacobs Engineering. If you're an American, you like that because they're one of the largest engineering companies in the world. 44,000 man-hours of engineering came up with that. The NPV5 of $2.8 billion is done at $2.75 a pound copper and what was it? About $1,200 an ounce gold. Today, at today's price, it's about $7 billion. The IRR is pretty modest of these things. Today, the IRR would be higher because of the metal prices if you want to use them. Payback at those prices was 7 years. It's interesting, these projects get built because they produce a lot of copper and gold for a long time. You can see on a gold equivalent basis, you produce gold for $18 an ounce. But on a gold only, net of copper credits, it's 18 an ounce. But overall, 606. Look how much gold it produces, 700,000 ounces of gold a year, 244 million pounds of copper a year. The reason that the big companies build them is because they can make a huge amount of money when prices are like they are now. And essentially the big companies bury the fact that they got big capex, they bury that and then they crow about how much money the project's made. But you can see 19-year mine life. The strategy, here's what the mine would look like, by the way, just for sizing it. If you look at that spiral, it looks like a lollipop. That is the open pit. It goes down to a depth of over 3,000 feet. I've just been in the US, so I'm sorry, I'm into the foot thing. 1,000 meters deep. You can see on the scale, it's about 2.5 kilometers wide. This project is very innovative. Jacobs put into this a waste disposal system using crushers and conveying systems, and that saved $1 billion off the capex. People say, hey, the capex isn't as high as we thought it would be, and it's because there's $1 billion saved. The tailings dam at the top there is built out of waste conveyed to the site as against being trucked to that site. This is in the materials that's on the website. It shows, in terms of grade, how does this grade compare? It's about almost identical to the grades of Cerro Casale that the Barrick Kinross project to the south of it. Theirs is 0.61, and I think ours is 0.58. We get a bit more copper than they have. The oxide deposit, the upper part, is what we're currently focusing on. I don't think I need to go to this piece. This is, in fact, I will. You can see that the mine, it says Caspiche in the kind of on the right-hand side. The blue is the water line, water corridor going off to the aquifers. That's a parallel corridor to what Barrick and Kinross will have for their project, should it proceed. We're drilling for water out there at present. We have about 70% of the water we need for the total project. We're trying to find the rest ourselves without buying it. On the bottom, the black line at the bottom, like heading off to the lower left, that's a pipeline corridor to go to a facility for roasting the ore to take off the arsenic. And you can see the port facilities. A lot of this infrastructure in the likelihood would be in the co-development of these projects because they're so nearby. A lot of the infrastructure could be saved. I'm not saying will be saved, but could be saved. So where are we going with the project? At this point in time, the oxide, that upper part of the project that I described, is something that we can develop and de-risk and go through environmental permitting. Would we ultimately, as Exeter, build that project? That is a question, A, that would come out of the economics, and B, what happens to the big project? The big project is best described here. This is showing kind of the scale of it. You know, when people say, what is this project worth? I can go on NPVs, I can go on IRRs, but that isn't the basis of transactions being done. That isn't how it's done. It's like real estate. If you put $1 million into a building, a house, is it worth $1 million? No, it's worth what somebody will pay for it. And we've always focused on this metric, and I dare say maybe the Casey group has looked at it. What you're seeing here is nearest, there's been 3 separate transactions done where Barrick on the, you see the bar graphs on the left is us. The second one over is Barrick's acquisition of Serra Casale. The third one, the other one over is Kinross and Goldcorp. What I'm saying here is in each case, those projects were purchased. Now, all of those transactions were done at either full feasibility or pre-feasibility. None of them were done at an early stage. So they're fairly fully valued from an engineering point of view when it was done. So Barrick paid that red bar $44 an ounce for the gold equivalent ounces when they bought 28 million ounces gold equivalent. The 42, the next red bar over, is what Kinross paid. And you can see over there, Goldcorp paid 34 gold equivalent. You can see over here, we're trading at about $9 an ounce gold equivalent. It's only been since January the 17th that we have the beginnings of a comparable document on which to value the project. Before it was all, what is ounces in the ground worth in Chile? We have now appointed both Standard Bank and Scotiabank in terms of the strategy of looking at either a co-developer or a buyer of Exeter, I'm going to say Exeter, buyer of Exeter for the purpose of the major transaction. In the meantime, we will advance the oxide project. You know, it's a monster deposit. It's very strategic. I mean, all the major, who produces all the copper around the world? Chile produces 1/3 of it. How much development, how many similar projects to this are getting built? At this time, there's 3 of them. I'm not saying they're all gold, some are copper, but the scale of this, 3 are being built now. So it's not beyond the industry's capacity to build another one of these projects. Very strategic location. I think there's quite a bit of coverage here, but here is the main point. This is such a strategic asset. There is no competition in the space in Chile for a project like this. And when the stars align, these projects are worth so much money. So much money. And that's the point to keep in mind. Thank you.
Okay, thank you very much. The number one question I get from our readers on this is, okay, you believe it's real, so we believe it's real, but when is this going to change? Because obviously the rest of the market doesn't believe it's real.
You know, somebody said to me when I was marketing recently in the real part means, in other words, when is a deal going to be done? That's when reality sets in. Casey Group, I'm sure, put up materials that show here's a life cycle of a junior gold company that shows all the euphoria of the excitement of the discovery, and then reality sets in as 2 years of engineering and 44,000 man-hours of engineering comes in. You get knocked down to a value, and then you rebuild that value because you now got something you can take forward to production, you can market it, what have you. And we're at the bottom of we're down in here. People say, why hasn't this project being taken forward? Why didn't somebody buy it at the exploration stage? Right now, the obvious answer is companies make acquisitions, and I won't say any, but they always buy them at the very top of the market, never when they're cheap. They just don't do it. They look at their most valued paper, and if their paper is sky high, they buy things and they pay way too much, all right? In our situation, if you look at Arizona Star, which many wins were on Arizona Star was trading at about 83 cents in 2001, and it sold at $17. But what was their previous high? $17 at the top of the expiration cycle. All the excitement, 17, 83 cents, back to 17, and that was the takeout by one of the majors. So I think you'll see us recover that value. I will not be drawn on M&A activity, who's out there, or anything else. That's something I can't talk about, but I can just come back to the strategic value. That value will be realized.
Okay, so you have the money to get to definitive feasibility on the sulfide?
We have the value to do a definitive feasibility study on the oxide, and we don't have any plan to do a definitive feasibility on the sulfide. What we're doing on the sulfide is optimization, trying to pick another 5% recovery, trying to shorten the timelines of development, get the water supply in. It is not our view that we can add a whole lot more value by doing another 88,000 man-hours of engineering on the sulfide. Any major will build that when and how he wants. It's very difficult for a junior to tell a major how to invest $5 billion.
Okay, and absent a deal on the sulfides, will you build the oxide?
Oh, I must say, the indicative economics were quite favorable. I didn't go through them, but the indicative economics came out already. We're looking at that. We're actually looking at a couple of things. One is the oxide standalone, and then maybe bring in some sulfide, and then even looking at the idea of maybe start modeling a different sulfide project. Instead of going into, here's $5 billion, Hollywood or bust, maybe even look at a development sort of oriented sulfide project. So there's lots of data now, having the January 17th study, to look at the best way forward. The main thing for us to do is, with the money, keep that project moving forward. Shorten the timeline, shorten the environmental. All of that adds value, not necessarily day-to-day to the market, but in terms of the ultimate transaction value, that's what we're trying to drive towards.
Okay, milestones next quarter or two. Sorry, we need to move on, but just real quick.
The milestones coming up is we'll announce shortly who's going to do the full feasibility study on the oxide. We are drilling on water targets now. It'll be important to this project for us to be bringing the water to account for the project. We are doing some drilling for the possibility of a blind discovery, another deposit nearby. I know the hole's going down there. I couldn't tell you what's in it, but there is some potential for a blind new discovery. And really, then through this year, apart from on the engineering front, it'll all be about optimizations. We picked up another 2% gold recovery doing by this, another 3% there, as we try to add more value.
Will the exchange let you get away with publishing something in a future study that shows what the difference in return would be if you didn't have to build a pipeline? Just as a contingency?
Oh, yeah. Well, the exchange isn't the issue. It's the BC Securities Commission. That's a good question. I don't know the answer. Generally, today, if you're going to change any part of a project, they want you to do the whole study back over again, and you're reinventing the wheel. The securities regulators are really, really making it difficult for the junior companies to be very clear about how things get remodeled without going all the way through these studies again. This is a very, very regulated environment, and if you think you're seeing it, it's going to get a lot worse, the regulatory environment that we're facing.
All right, the likelihood is that big mine is going to be built in conjunction with something else very nearby, and it just seems... Anyway, okay.
That's his forward-looking statement, not mine.
Yeah.
All right.
All right, thank you very much, Yale.